Well, here we are. Happy Monday. So glad you could join us today. I'm Marlon Boulding with you, your tour guide to the ag commodities, and we are going to take a look at what to expect in today's trade. With help from the president of Midwest Market Solutions, we have Brian Hoops on the line, and we're going to chat with him a little bit about what to expect in the market activity today. So, Brian, talk to me about the overnight trade where we had the big gains. In fact, we'll go ahead and take a look at some of these prices here, and I want to get your take on this. So on the corn overnight, Tammy mentioned earlier that we had some pretty strong gains, double-digit gains in the corn. September up 19 cents. We had December up 19 cents overnight. In the soybean trade, here you had the August contract up 18 cents overnight, and November was 19 and a quarter higher. And switching over to the wheat market here on the Chicago trade, we were 10 and a quarter higher on September. We did close above $9 at 901 and 3/4. I wanted to point out, though, that's fairly close to our low of the overnight trade. Look at where the high was. Brian, it got up to 940 and a quarter, closed at 901 and 3/4. Now, that was still 10 and a quarter higher, but my goodness, almost 30 cents off of that overnight high. We'll come back to that in a second here. Kansas City wheat, we had September up 13 and 3/4 at 959 and a half. Similar action to what we saw in the Chicago wheat. On the spring wheat market, with these quotes provided by bar charts, September was 21 and 3/4 higher at 1013 and a half. So, Brian, what happened overnight to the wheat market to cause such extreme volatility there?
Hey, good morning, Marlon. It's a volatile time period right now for all these markets. We saw a gap higher in corn and soybeans overnight. In fact, all these markets gapped higher, including the wheat. Technicians will look at the charts and say there's an island bottom on corn and soybean charts, meaning last Tuesday we gapped lower, traded for 4 days, then gapped higher. Usually that's a very reliable indicator of a bottom in the marketplace. And, we traded 4 days there. So the longer you trade, the more strength the upward movement's going to have. But we're trading forecast to forecast at this time frame. There's been some rumors that China was interested in wheat. Some of those rumors were kind of refuted. We didn't see any private export sales here recently. So it's left the wheat market to trade very choppy and very volatile. But spring wheat, if there's an upside leader, it may be that spring wheat market from the standpoint that, it's off to a decent start after getting planted, but things are starting to turn hotter and drier once again. These forecasts have a lot of heat going all the way through central plains into the upper plains. So you could see yields being curtailed in corn, soybeans, and spring wheat. And when you start talking about reducing supplies of a market because of lack of production, that's where you see, the most volatile movement. And that's where the spring wheat market that we're watching here this morning is, possibility is that yield is going to be cut in corn, soybeans, and spring wheat, giving us all this strength. So we're trading forecast to forecast. We traded last night, gap higher opening, hot and dry weather forecast. This morning models have maybe a little bit more moisture coming into them. That's not why we backed off of those overnight highs. But again, we go into the midday time frame. We'll be watching midday weather models. If they're hot and dry, we look for gains to be added into the closing bell.
All right. Well, it is that time of the year. And from your perspective, where are we in the resolution of the spring wheat acreage this year? I mean, there was a lot of talk that we might have, 1 million acres fewer this year than what we normally would have. Where do we stand and when do we find out?
Yeah, the June 30th acreage report was kind of a bearish report for spring wheat from the standpoint not near as many acres were set aside as what had been expected. And that's due to the prices that we've seen, that, spring wheat prices is high enough to justify getting into those fields. But certainly they're going to be resurveyed in the month of August. So those acres are subject to change. You look at tomorrow's supply and demand report, we've got a lot of things going on with that report tomorrow. We really don't expect it to be a major market mover. USDA likely to leave corn, soybean yields unchanged. They haven't changed corn yields since back in 2012. But if they start reducing yields, things could get very exciting as balance sheets tighten up considerably for corn, soybeans, and for spring wheat because of lack of acres.
One thing I wanted to point out before we get into our break, I want to make sure you know about the U.S. dollar index, and overnight, look at what it did. September U.S. dollar index futures at last check are now at 107.960. They're almost at 108 now. and they're on the high of the overnight and early morning trade. It is up 1,139 points on the dollar index right now, and that could put a significant dent in foreign demand for U.S. ag products. We'll be back in a moment. We'll talk more with Brian Hoops about our livestock trade after this. All right, we're talking with Brian Hoops of Midwest Market Solutions. Now, let's talk about some of the other outside markets. Okay, we talked just a little bit ago about the value of the dollar. I want to touch on, for one thing, the Dow. What's it doing overnight with the equity trade? Well, it's actually weaker by 175 points. We're at 31,000 to 135. The crude oil market getting kind of weak in the knees here, and it's down $1.75. We're at 103.04. That would be per barrel, of course, and a lot of folks wondering about if that's related to fear of, well, inflation/recession. But on the other hand, look at the natural gas. And Brian, this is a very critical commodity this time of year. A lot of folks use natural gas for irrigation needs, and you know they're going to need it for grain drying here in a couple of months. August natural gas futures are up 59. If you round it off, it'd be 60 cents higher at 6.62 and 6/10 per million BTUs. Is that related to the fact that Russia says they want to cut off Germany for 10 days for quote unquote maintenance on the pipeline?
Right. Yeah, there's a lot of moving things, as you mentioned, with the dollar and natural gas, crude oil. A lot of it has to do what's happening overseas. There was, rumors about what you're talking about here with Russia cutting off Germany. European Union is weakening as far as some of their currency, and that's strengthening the U.S. dollar index. There's talk of that China could go back into COVID-type restrictions, which has hurt the crude oil markets. And these will factor into our grain trade, especially with the fund traders. They're going to look at the higher U.S. dollar and sell grains against it. Crude oil, if it continues to work lower, that would be a drag on energy prices as well as corn values. So a lot of moving factors, moving pieces. Weather's not the only thing but it's certainly one of the main things that we look at.
All right, let's look at where we finished last week on the livestock trade. Let's go to live cattle here. And on the big board, we were lower with August down 60 cents. October was down 90 on Friday. On the feeder cattle market, we finished up with August down 75 cents. September was down $1.32. And on the lean hogs, we actually had the August down 32, but the deferreds were higher. What do you see for opening calls this morning?
Well, certainly with the cattle market, we're going to be influenced by higher corn prices. Even if we're off of the highs of the day, we're still looking at, probably a lower opening in feeder cattle and fat cattle based off the fact that corn is 19-20 cents stronger in the overnight markets. At the end of the week, last week, we saw cash trade steady to lower in most areas. Okay. Steer weights were increasing. Export sales that we talked about on Friday morning were a real disappointment. So probably best outlook this morning here is for steady type cash trade. And with the corn being higher, certainly feeder cattle going to come under some selling pressure, and that's going to spill over into the fat cattle market as well.
Interesting stuff. Thanks, Brian, for all the information this morning. I appreciate that very much. Brian Hoops of Midwest Market Solutions. So we're about ready to begin. Tammy will get everything trading at the bottom of the hour.